Hopefully this video will help a lot of people. As you can imagine, after all the Fishbowl users that I've helped over the years implement Fishbowl, learn to use Fishbowl, learn to set up Fishbowl, I've come across some doozies, right? I do a lot of implementation improvement projects, people that have done their best implementing Fishbowl, but then came across some problems, came to me and said, help, right? So in this video, I want to talk about the doozies, the most common mistakes, maybe the biggest mistakes, the most painful mistakes, the mistakes that stand out to me the most. So without further ado, let's look at the list here. Now I'd say most of these fall under the category of what I have listed up here at the top. Kind of having a plug and play mentality, not being careful, rushing into it, not putting enough thought into how it's set up and how you're going to use it before you set it up and before you use it. So let's talk about these plug and play mentality tendencies that I see a lot of people doing. One of the easiest blunders I think people rush into is not preparing the chart of accounts. They go with the default settings when plugging Fishbowl into QuickBooks and don't put a lot of thought into how the data is going to flow over to QuickBooks and affect the chart of accounts. I think the chart of accounts needs to be prepared to receive the Fishbowl logic and the way Fishbowl thinks of accounting instead of just the way you've thought of accounting previous to Fishbowl. We'll talk more about that. The next one, not understanding how the bill of material features work, not testing the bill of materials, right? So there's some automated settings in the bill of material that I want to look at with you. You know, when's the time to use a step? When's the time to use a bill of material? Which auto create setting should you use? Should you use auto MO? Should you use custom work order? Should you use the sales order custom work order? So there's a lot of decisions to make, and you really should test your bill of materials setup to assure it's going to work with your workflow before you just dive in and start using it. Not understanding location groups. Now, in a lot of companies can get away with this at first, but this comes back to bite them later as they grow and they add more location groups to the system. The biggest misunderstanding of a location group is it's an area or a zone, but it's not an area, it's not a zone. A location group was designed to represent a building with an address. And we'll talk about how to fix that and why it's not always the best idea to use a location group as a zone or an area instead of its designed original intended purpose. Unit of measure mistakes. Yikes, I've had to help companies rebuild their entire database because of unit of measure mistakes and not putting enough thought into the way they set up units of measure. A very small mistake with enormous consequences. Part type mistakes. This affects accounting. This can also affect operations. If you select the wrong part type, the part types in Fishbowl are connected to functions and features. They're functional. So the part will behave differently depending on what type of part you select. So let's dive into the details of why these are big mistakes, or why this can be a big deal if you don't put enough thought into these areas when you're setting up Fishbowl and learning how to use it. So let's look at the mistake not preparing the chart of accounts. How should the chart of accounts be prepared to accept a successful connection with Fishbowl inventory? Now, it doesn't matter whether you use QuickBooks Desktop chart of accounts or you use QuickBooks Online chart of accounts. Both of them still need to be prepared to accept Fishbowl inventory. So let's talk about what needs to be prepared. This chart of accounts that we're looking at here is just from a dummy account. It's nothing special. And I want to focus on account types mostly. When we integrate Fishbowl with QuickBooks, that's done under this integration section in Fishbowl. Excuse me, accounting integration section right here in Fishbowl. Under the configuration tab, we've got QuickBooks Desktop, QuickBooks Online. We can connect to either one here. Fishbowl gives you some instructions. All right, when you click in here to make your connection, and after you've connected, it's connecting here, let's wait for it to connect. It gives you a whole list of accounts to connect to. And it looks like it's going to work just fine, and it might. A lot of the times it doesn't, though, because you had a different idea of how your chart of accounts would work before you connected an inventory software to it. For instance, probably the most common difference I see is how people view cost of goods sold versus inventory. Costing out inventory immediately instead of letting it go to the balance sheet before it's sold and then hits cost of goods sold. Especially with manufacturers who think of labor as cost of goods sold. Service that you sell is cost of goods sold. That might be. How does Fishbowl handle prepaid inventory, for instance? Whether you prepay inventory to your vendor or you accept prepayments from your customers. Another area that surprises a lot of people is shipping accrual. Fishbowl has this account. It's a liability account that Fishbowl posts to. And most people I've talked to that connect Fishbowl to the QuickBooks chart of accounts for the first time look at this as something new and they wonder if they even need it. So learn about shipping accrual and what shipping accrual is. Learn how Fishbowl handles labor. One of the best ways I've seen here, I'm going to kind of switch back and forth for convenience from QuickBooks Online and QuickBooks Desktop, because this applies to QuickBooks Online or QuickBooks Desktop, so it doesn't really matter. But if I scroll down here to this chart of accounts that I've played with in the past, you'll notice labor is a cost of goods sold here, but really when you connect to QuickBooks, you should consider making labor a sub-account of your wages. Let's see if I can find it here. Oh, there we go. I highlighted it. A sub-account of your wages, a direct labor absorption account, which is a negative account. And basically what happens here is you absorb some of your labor onto the balance sheet. So you absorb it off the bottom of your P&L onto the balance sheet into your inventory. And then once you sell the inventory, that hits cost of goods sold, right? Because it's already been absorbed, and by then both the materials and labor are combined into the finished good that you're going to sell, and at that point it hits cost of goods sold. Another thing that works that I've seen people use is kind of a pass-through account. If you don't like the sub-account for wages and the direct labor absorption, you could create a pass-through account as maybe a sub-account on inventory, or maybe not a sub-account, just an other current asset account over on your balance sheet, kind of a pass-through account. I know some accountants I've talked to prefer this method instead. So that's something to think about. Where is it? Shipping accrual account. Here it is. The shipping accrual account. This is an interesting account that Fishbowl sort of imposes on you, or encourages you to use when you receive inventory and you're charged for shipping from someone other than the vendor. So it's not on the invoice. It's a separate shipping charge. Maybe it's a brokerage fee or a tariff or or something other than what the vendor charges you for shipping. Fishbowl doesn't create a bill for that shipping charge. Instead, it puts it in a shipping accrual account, which is a liability account. And there's documentation on this. I should probably make a video about this. But Fishbowl's got really good documentation on how Fishbowl talks to QuickBooks. The best way to find it is to Google Fishbowl Journal or Fishbowl Journal entries, and that'll take you right to the page, and Fishbowl will show you all the different transactions that Fishbowl will send over to QuickBooks. And this shipping accrual is kind of a curveball. It's one to look at and consider and understand. Shipping accrual is also hit on the shipping side, so not just the receiving side, but if you have Fishbowl integrated with a carrier software, and that integration is taking the cost of the carrier and putting it right onto the carton, then that will accrue a shipping liability, right? So the sales order would have a shipping income line on the sales order that will hit AR and income, but then you'll have another shipping journal entry separate from that that will hit shipping accrual and shipping expense. So then the idea behind this, once you accrue your liability, your shipping liability, is once you get the actual bill from the carrier, you'll put the bill into QuickBooks, change the account to shipping accrual, so it comes back out of shipping accrual. So anyways, I don't want to dive into too much detail. Hopefully the main point I want to get across is you need to rethink your chart of accounts and how your chart of accounts is set up, and understand how Fishbowl is going to communicate with your chart of accounts, how it's going to send data to your chart of accounts. And you may need to make some changes to your chart of accounts so Fishbowl will communicate with your chart of accounts effectively and accurately and in a way that you're okay with and comfortable with. The second big blunder, the big mistake I see new Fishbowl users making, is misunderstanding the BOM features. So here we see the manufacturer order screen on Fishbowl, and we see a work order on each line and a location group here. We see a start and finish and a category for the manufacturer or for the work order. What do all these features and functions mean? How do they work? I think it's important to understand how the work order works, what the workflow is before you start using your bill of material. Test out your bill of material before you start using it live. So let's pull up the bill of material screen here and pull up a bill of material and take a look at this. A lot of parts, a lot of components on here, and a finished good. Some questions that you should ask yourself and questions you should answer is, when should a bill of material be a bill of material? The answer to that usually is, at this point in the workflow, will this go back into stock for a day or two? Or do you want to run a report and see how many of this whatever is at this stage in stock? So this could apply to food manufacturing, health and beauty manufacturing, technology manufacturing, whatever type of assembly or production or manufacturing you're in. Ask yourself, should it be a step, or should it be should it be a step right here, or should it be a separate bill of material and a stage over here? I don't know if I have an example with one with a stage, but should it be a sub bill of material and something with a stage? In In the bill of material area, probably the most common misunderstanding I see people struggle with is this auto create. And as you can imagine, over the years, I've developed my own opinion. What I like to see, what I think has worked best for most of my clients. And either never or short quantity is something I recommend most people use, because Fishbowl has the auto MO. And the auto MO will tell you what to manufacture, and the auto MO will aggregate. Let me just show you the auto MO, tell you what I'm talking about. Over here on the manufacturer order screen, we have this auto MO right here. The auto MO will run a calculation that will take, let's go there. It'll take your quantity on hand, subtract available, subtract short, and then add on order. That's a good one to write down. I go into this in further detail on other videos. That's quantity on hand, subtract available, or excuse me, quantity on hand, subtract allocated. If I said available, forgive me. Quantity on hand, subtract allocated, that equals available. Subtract quantity short plus quantity on order. So that's on hand minus allocated minus short plus on order equals X. Then Fishbowl brings you through a formula. If X is less than the reorder point or less than 0, then order up to level, which is your max, subtract X equals the quantity recommended to manufacture. So I call this semi-automation. It feels like you have a lot more control, and you can aggregate your work orders. So if you have 10 different orders calling for something, it's going to take those 10 different orders and tell you to make 10 of those on one work order. As opposed, if you have a bill of materials set to order quantity or always create or build to order, it's going to create a 1-to-1 ratio between your sales order and your work order, and create a work order for each one. So think about this, how this would play to your benefit or to your demise. It may be a good thing, it may be a bad thing. The important thing to understand is if it will work for your workflow. And what I find with most people is the auto MO works better than the auto create in most circumstances, in most situations. Short quantity is kind of nice because then it won't show up on your auto PO. So that's another thing to consider. All these things you don't realize, you create one setting and it affects something else in a way that you weren't expecting. And that's why I really encourage testing before you go live. So if we come here to the auto PO that runs the same formula, on hand, subtract allocated, subtract short, plus on order equals X. If X is less than the reorder point or 0, then order up 2 levels, subtract X equals quantity recommendation, right? Same formula embedded in this. But this section here that says no vendor parts, sometimes your bills of material, the parts that you make will show up here because the auto create setting is set to never. And you'll see this little checkbox over here. It's crazy, it all ties together, right? You never thought that the auto PO would have anything to do with those auto create settings on the bill of material, but it does. Include when short, always create, and build to order. It's talking about those auto create settings over on over on the bill of material screen. So put some thought into these auto create settings, these testings, and understand that the auto MO will also automatically create, but in a semi-automatic form that will give you more control and help you aggregate your manufacturing. Okay. So I say that's one of the big mistakes people make, because the wrong auto create setting will cause problems, cause headaches, cause frustration if it's not set up correctly. Build to order is for those who have kind of a custom type of bill of material or manufacturer order that needs to have a hard lock to the sales order. So if you have build to order turned on and that sales order automatically creates a work order, then if you have multiple sales orders calling for the same thing, they're all creating their own work order, there's going to be a hard tie. I'm not saying it's bad or good. I'm saying you need to understand that. And that's why I say one of the biggest mistakes is misunderstanding. Misunderstanding the BOM features. It's not that the BOM features are bad or good. It's they're bad if they're used wrong. They're good if they're used right. So misunderstanding is one of the biggest mistakes, and testing is going to help you solve that problem. So before you create all of your work order, or before you create all your bills of material and dump them all in your system, create a small subset. If you have multiple levels of bills of material, create every single level, create your sales order, and fulfill the sales order, and begin to learn and understand how the auto MO and the auto create works, because you may want an auto create setting turned on for your top level BOM, but maybe for your lower level, your sub level BOMs, you may want the auto create settings set to never and aggregate the creation of the work orders for those lower level bills of material. Okay, so number 2 big mistake, misunderstanding BOM features. Let's go to the next one. Misunderstanding location groups. Far too often I see people misunderstand a location group being a zone or an area, but that's actually not the way the location group was originally designed to be used. And yes, I'm speaking by my own personal opinion here, but my opinion does come from the times that I actually worked for Fishbowl from 2006 to 2009. Before a certain picking feature was added about, I don't know, 5 or 10 years ago. On the location group screen, we see I set up an example of someone that created location groups as zones or areas within the building. And also maybe tried to categorize parts using location groups. So those are probably the 2 most misunderstood ways of using location groups, or the 2 biggest mistaken ways to use location groups, is to try to categorize parts or use it as an area or a zone. And let me just explain a little bit here and show you some things you may not have noticed when you thought about using location groups as zones. If you're just on the location group screen, you see the name location group, and it just sounds like a group of locations. And if you look over on the location screen, it has this auto create setting, that this auto create button here that encourages you to create locations as shelf or bin locations, right? Aisles, sections, shelf, positions. So when you think, well, location group, the name itself makes me think that it's a group of these locations, which would be a zone or an area. But where we start to see conflicts with this idea is where the system was originally designed. If we If we come here to the company screen, and I've seen this a lot when I help companies, this is a question I ask a lot, is how many location groups do you have, and how many addresses does your inventory that you own appear? Because look at this, over on the company screen under address, you see it's assigned to a location group. A location group is tied to an address. Let's look at something else here. If we go to the sales order screen, the sales order screen has a location group. Let's go to the manufacturer order screen. We could see this on the work order screen too. The manufacturer order screen is tied to a location group. The purchase order screen, if we go to a purchase order screen, we'll see that the purchase order is tied to a location group. So what I'm trying to say is the location group is very address intensive. And where it probably all comes together is when we look at the user screen and pull up a user and see that users are connected to location groups. If we look at the mobile device as well, Fishbowl Go, there was a time where the mobile device was tied to a user, and that user could only log in to a certain location group, understanding that we are not omnipresent beings. We can only be in one address location at a time. So it's best to set up locations as a building with an address, even if you have inventory that you own at your vendor's location. And case in point, if you're using the Auto PO tool, the Auto PO tool says filter location groups by. So you can actually look at supply and demand, or you can actually ask Fishbowl to look at supply and demand at your vendor location if you have an outsourced manufacturer, and keep healthy stock levels at your vendor location as well. Which brings me to my next point with location groups and why they're not necessarily an area or a zone. And if they are, then you need to be careful when considering them, because that's an exception to the rule, not the general rule. If we go to the location group screen, go to Tools, Module Options, you'll see that we can set up reorder points by location group or company-wide. So I've seen an exception to this rule that I've seen work okay with fulfillment centers who use reorder points in a staging area. For instance, they stock up so they can fulfill quickly, and in the picking and shipping area they have like this staging area that they keep full, and they have reorder points to help them use transfer orders to keep that staging area stocked. That's an exception to the rule, and I've seen that work. But generally speaking, location groups are a building with an address. And if you have multiple buildings and you want to transfer from one building to another, let's say you want to use more of a hub and spoke methodology where you purchase everything to the hub and then you transfer to the spokes. Well, Fishbowl has this tool called the Auto Replenish tool under, let's go to the transfer order. Under the transfer order, replenish. And what this does is it actually looks at the reorder points of the warehouse that you want to ship to and says, how are the stock levels doing over there? Going through that same formula that I mentioned, on hand, subtract allocated, subtract short, plus on order equals X if X is less than the reorder point, or 0, then order up 2 levels, subtract x equals the quantity to transfer, right? So these spoke warehouses can request from the hub warehouse the quantity that they need to get back to their healthy stock level. And so if you're using location groups the way they were designed to work, then the hub and spoke methodology will work for you. The outsourced vendor manufacturing will work for you with reorder points. But if you got creative and you decided to use location groups as areas or zones or part categories, then you may start to get in a fight with the system. And yes, I am aware of the feature Fishbowl added years ago on the picking screen under Tools, Module Options. There's this feature that says allow picking from all location groups the user has access to. Definitely got to mention that here. Basically what that does is it allows you to look at location groups as an area or a zone. But as you grow, and if you have multiple location groups, your concept of multiple addresses may start to conflict with your concept of multiple areas and zones within one of your warehouses, and it could get messy. Areas and zones might work if you have one warehouse, but be careful when you're considering that and test it to assure it's going to work right. But also consider your growth rate. Do you have a 10% growth rate, or do you have a 100% growth rate? How soon are you going to have warehouses dotting the country, and really need to look at this hub and spoke or have reorder points at different warehouses? Okay. There was one other thing that I was thinking about and I forgot it, so it must not have been that important, but had to do with reorder. Oh, okay, I just remembered. So if we come here, this is kind of cool. If you're thinking about areas and zones and really wishing you could do the areas and zones, consider this option. This I did this with another company and it worked really well, and we really liked it. What we did is we came to custom fields. We created a list called an area or a zone, zone, and then zone 1, zone 2, etc. Maybe I'm getting into the weeds on this video, but created zones as a list type custom field, and then on the location screen we added the zone to the location screen. Fishbowl added the ability to add custom fields to locations a while ago. It's great great upgrade by Fishbowl. So now we can add a zone custom field to the locations, and in the location screen, if we go to the location, we can now go to the custom field and say, okay, this location is in this zone. So really cool. Unfortunately, the custom field doesn't work with the searching filters on the picking screen, but it worked well for this company because they didn't, well, I can't remember if they needed that or not, but it worked because we put the zone picking on the pick tickets. So on one pick ticket, we could divide that pick ticket into 3 different pages. So this page went to this zone, this page went to this zone, this page went to this zone, and it worked. So anyways, location groups were not originally designed to be used as zones or areas. They were originally designed to represent a building with an address. Let's go to the next most common blunder. The next most common blunder is getting units of measure wrong. So what do you need to do to get units of measures right? Here we are on the unit of measure screen in Fishbowl. You'll see a list of units of measures here, but the important thing to see is the unit of measure conversions. The unit of measure conversions are found on the unit of measure screen. If we go to the part screen, we don't see unit of measure conversions anywhere on the part screen. We only see the unit of measure on the part screen. This is an important thing to understand. The unit of measure conversions are shared between all the parts in Fishbowl. What that means is if you have multiple cases, or if you have multiple conversions, say you're trying to convert from liquid to weight, or maybe you're trying to convert pounds of steel to linear measurements, or let's say you have multiple cases, a case of 24, a case of 20, a case of 50. You can't just use CS or case as a part. You need to create a case of 12 and a case of 24 and a case of 50. You have to create a case for each one and then a unit of measure conversion for each one. So you can't just have a case. You need, say, a case of 12, CS12, and then a unit of measure conversion from that case here. Case of 12, convert to each. Case of 12 is greater than each. This is where the multiplier is found, and every part in the entire system will share the same multiplier and unit of measure conversion. So that's an important thing to get right. If you get unit of measures wrong and you apply a unit of measure to a part, the system may or may not let you change the unit of measure depending on if that part has been used or not. I've had to rebuild entire databases because the unit of measures need to be changed, need to be recreated, and in times we had to recreate part numbers. So one thing to consider when you're looking at units of measure is you have the part unit of measure, which is your stock unit of measure. Here you've got the product unit of measure, which is the unit of measure you sell it in. On the product screen you can see both the part unit of measure and the product unit of measure on the product screen. Fishbowl allows you to have multiple products per part, so you can sell in different units of measure based on the multiple products. You can also toggle the unit of measure to choose on the sales order screen too. So there's a choice to be made whether to use products and the product unit of measure or to use the toggle on the sales order. Then for manufacturing, if we look at bills of material, you'll see that each part is consumed in a unit of measure. If I highlight this here, you'll see that the unit of measure for the consumption is there. You don't have to consume in the part unit of measure. Also, there's a yield unit of measure. So the finished good has a unit of measure and the part consumption has a unit of measure. So you can build bridges between what you want to see it in stock as and what you want to consume it as. So you may stock it in 50-gallon barrels, but consume it on the bill of material in 8 ounces, right? And you just need a conversion between a 50-gallon barrel and ounces. How many ounces are in a 50-gallon barrel, right? And then also there's a unit of measure for what you purchase it in. If we're on the part screen, if we go back to the part screen, there's a vendor tab on the part screen here, and under the vendor tab is the unit of measure you purchase it in. And this may go along with the minimum requirement here, the minimum order requirement, minimum quantity. So Fishbowl does not have a purchase interval. They have a minimum order quantity and they have a unit of measure quantity that you purchase it in. And also you can purchase in different units of measure by toggling on the purchase order as well, just like you can toggle on the sales order. So my advice is to test the units of measure. Don't create your entire part list. Don't create your entire bills of material list until you have your units of measure tested from sales creation, work order creation, purchase order creation, purchase order fulfillment, work order fulfillment, sales order fulfillment, the entire life cycle of the part. Be sure to test it and the unit of measure conversions to assure they're going to work the way you need them to work. Now, if you have something more complex, like you need to convert pounds to linear feet, or maybe you have catch weight, I've found a good way of accomplishing that, and that is with the part custom field. And you can create a multiplier for that specific part to convert pounds to linear feet, or catch weight. I shouldn't have mentioned catch weight because I haven't found a good way to handle catch weight that I can think of. I shouldn't have said anything about catch weight. So forget I said anything about catch weight. But buying lumber or steel, I have found a good solution there with custom fields, using a part custom field with the multiplier for that specific part to convert pounds to linear feet. So if you need to purchase from the vendor in pounds, the vendor charges you by pound, but then you want to stock in linear feet and consume in a work order in linear feet, make your vendor unit of measure linear feet, your part unit of measure linear feet, then use the custom field and create a custom report, or hire us to create a custom report to convert the linear feet to pounds and display pounds on the purchase order as well. So the pounds won't show on the purchase order screen, they'll just show on the purchase order printout. So units of measures, be sure to get units of measures correct. That's the other big blunder. Last but not least, another big blunder I see often is part type mistakes. So what is a part type mistake? Let's go there. We're on the part screen, and you'll notice there's a column here that says type. And if we click on this drop down, there's a whole list of types of parts. Inventory type part, service type part, labor type part, overhead type part. Be careful how you interpret this. Okay? I've seen accountants interpret this from an accountant's perspective, and I've seen operations interpret this from an operations perspective. I've seen QuickBooks users interpret part types from a QuickBooks user perspective. Try to abandon your perspective and look at Fishbowl the way they described the part type works. These part types are connected to accounts in QuickBooks. The accounting for these part types will function differently based on what part you choose. For instance, service type parts, labor type parts, overhead type parts, they're mapped to a service account, a labor account, an overhead account. Also, the cost of service is a standard cost. The cost of labor is a standard cost. The cost of overhead is a standard cost. But service, labor, and overhead are not non-inventory type parts. A non-inventory type part is a tangible item you can hold in your hand. You can't hold service, labor, or overhead in your hand. So just because it's not inventory doesn't necessarily mean it's a non-inventory type part. It could mean it's actually a service type part, or a labor type part, or an overhead type part. And this is a common problem with those who just do a plug and play with QuickBooks and just plug into QuickBooks, pull over all the parts from QuickBooks, and roll with whatever Fishbowl type Fishbowl assigned it to be. Just because Fishbowl can pull those over from QuickBooks doesn't necessarily mean QuickBooks is smart, or Fishbowl is smart enough to know exactly what type of part each part should be. You should review your part types after plugging Fishbowl into QuickBooks and pulling those over. So non-inventory type part is not what it used to mean in QuickBooks. Fishbowl has given it a new meaning. A non-inventory type part is a tangible item you can hold in your hand that, and here's the key, it can be picked, and it can be packed, and it can be shipped. So a non-inventory type part is going to show up on the picking screen. And if it's not picked, then your order will not be fulfilled. So your pickers are going to look at this service that you called a non-inventory type part, and they could possibly ignore it, right? A non-inventory type part has units of measure. It's mapped to an expense account in QuickBooks. Whether or not it should be mapped to a COGS account or expense account is something that you should think through and test for yourself. Internal use, capital equipment, those aren't used very often. I wouldn't worry if you're not using either one of those. Capital equipment does not do anything with depreciation or depreciation expense. It just maps to the fixed asset, and that's it. Now, shipping is something that you should look into, and something that you should learn to understand. Shipping is a functional type of part and is tied to features on the sales order, tied to accounting. The accrual account I mentioned earlier in this video is tied to a shipping type part. The other part types do not tie into accrual. So things to think about there. Inventory is the only part that you can track lot number, serial number, revision level, any of these other tracking values, expiration date. You can't track those with any of these other part types. Inventory is the only one that by default posts to the balance sheet. And yes, you can pick, pack, and ship inventory and receive inventory and all that, of course. So don't just look at the name of the part type and assume you know what it's going to do. That's blunder number 5 or whatever number I'm on. Learn to understand the part types and how they function. So those are the big blunders that I see all the time from those who have self-implemented Fishbowl or hired someone else to help them implement Fishbowl, and they got the setup wrong or misunderstood how it should be used. Hopefully you found this helpful. Please subscribe below, comment below if you have questions, click like if this was helpful, and we'll see you on the next video.